All right, let's go back to the data. Kevin Hincks at the CBOE. Take me through the numbers here, Kev, on jobs and more.
Good morning, Oliver. Yeah, U.S. non-farm payrolls up 151,000 jobs, Oliver. That is slightly below consensus of around 160. The range, Oliver, I'm hearing 30,000 to 300,000. What was the range for estimates? So they were all over the board. So a relatively calm number based on that. Unemployment ticks up a tenth from 4% to 4.1%. Private payrolls, 140,000. Right at the level that was expected of 143. Manufacturing payrolls up 10,000. Labor force participation rate 62.4%. A bit alarming in the labor force participation rate. But here's the inflation data. Average hourly earnings on a month-over-month basis up 0.3, and year-over-year average hourly earnings up 4%. That's 0.2 lower in the month-over-month number and a tenth lower in the year-over-year data. Average work week 34.1 hours. Oliver, I think it's important to note that the largest increase, healthcare up 52,000 jobs, but here's the one that caught my eye. Federal government employees, Oliver, down 10,000 jobs. So remember, for the 12 months of 2024, they averaged 43,000 jobs per month, Oliver. So seeing down 10,000, that's a significant change in tone there.
All right, well, they're about 1/100th of the way there, according to what they say. Trump and Elon and team, that they're going to cut like 1 million jobs, something like that. So if this is the beginning, then we're going to get this 100 more times. So buckle up.
Yeah. Oliver, big candles as the number came out, all the way up to, I saw 57.86 in the E-minis in the 1 minute candles, and then all the way back down to unchanged, down slightly, now just down 0.1%. So big volatility to start the day, Oliver.
All things held equal, usually a print that close to reality you would think would be okay for the market. The initial response was for futures to move higher. So giving them back doesn't look great right now when it seems this number could have been totally fine for a rally.
Yeah, two things, Oliver. Number one, you're right. With the markets doing, down almost 6% in the last month and down 2.5% this week, the odds for a relief rally based on this number are fair. Also, you've got Jerome Powell talking today at 12:30 Eastern time. He, in general, you've heard me say this a lot, generally delivers data to the markets that the markets like. So there's a couple things, but there's tons of Fed speakers.
He delivers
today.
words.
John Williams, Michelle Bowman, Adriana Kugler twice today, and then, of course, the headliner, Jerome Powell, about 12:30 Eastern time, Oliver.
What kind of impact do you think that could have here, Kev? I mean, what could he say? Is he going to update anything from the last time we heard because a few stocks got hit? Or will he be looking at some of those economic data points that missed? I mean, a lot of it was survey data. The man likes his jobs numbers, and they don't seem as really worthy of anything new from his angle.
Yeah, we'll see what he talks about. He'll certainly have to acknowledge the economic data that he's gotten here this morning, and he'll probably say at 4.1%, the economy is strong in terms of unemployment. The inflation is coming down with the wages month over month and year over year. That's coming down, so inflation is moderating slightly, and jobs are strong. So he'll probably have, in my opinion, a pretty solid message to give to the markets. We'll see what happens. We'll see if that translates into any type of a relief rally after, as you know, a bumpy week and actually 2 weeks in the markets.
For sure. Well, no pressure, Jerome, per usual. But market looking for June for that cut. So we are back to expecting summer love from the Fed. We'll see if he corroborates any of that. Thanks, Kev. Appreciate the look at the numbers on the employment side.